So, for the first time since 2020, buyer affordability across the country, according to data, has actually improved. If you're out there looking for a house right now or you recently purchased one, you might not feel that, but the numbers are there. While this is undoubtedly great news for buyers, affordability still seems to remain a challenge. Now, one of the reasons why is that according to recent data provided by redfin.com, the average US household needs to have an income of at least $115,000 to purchase the median priced home in the country. Now, the balance of that, unfortunately, is that the average US household only brings in about $84,000. What this does is create a 27% gap between what the country's normal household is bringing in and what an actual house costs. So, because of this, many homebuyers are actually starting to make compromises in purchasing the home that they want. Navigating these compromises smartly can ensure that you still get your home that you love without actually overspending on it. So let's dive in a little bit deeper into what these compromises are so that if you're out there right now, you don't really feel alone. So, the top compromises that buyers are making. According to Homes.com and Apartment Therapy, they've recently conducted a survey called the State of Home Buying. They've asked 676 different participants who have either recently purchased a home or are deep in the process of doing so. According to the survey, these are the top compromises that are being made. So the first one is the style of home that people are after. So the single family home is essentially becoming less attainable for a lot of people. Most of the reason is due to supply and demand. And the other thing is that it's a lot cheaper for builders that are building new homes to build townhouses and condos and able to sell those at a higher rate than build single family homes on larger pieces of land. For those with a budget of less than $500,000, what we're finding is that about 17% of these buyers are now looking at condos and apartments as viable options. Locally, that tends to be more in the Philadelphia city market. On the back end, about 15% nationally are now exploring townhomes as options, and those numbers for us locally tend to be more in the suburbs of Philadelphia, Delaware County, Chester County, and Montgomery County specifically. So these homes, what they do is they provide a little bit more affordability. Typically, for the same square footage that you would be looking for in terms of your livability in a single family home, you're able to get a significantly less monthly payment and overall price of the home if you switch to the townhouse or condo. Now, the one thing that you have to remember with these is that a lot of times there's condo fees and HOA fees involved. There's something called a capital charge that's done at the time of closing, which is cash out of your pocket that's given to the condo association in order to do improvements on the home in the community. And then there's HOA fees. And while they provide, a lot of benefits, usually gyms, pools, clubhouses, tennis courts, and then a lot of times lawn maintenance, snow removal, and trash, you have to remember that this is still coming out of your pocket on a monthly basis, and they're unchangeable. The other thing is location. So why does a house cost so much? The age-old answer is location, location, location. If you buy beachfront property, it's going to cost significantly more than the same house a mile away from the beach. Locally, a lot of that tends to be driven towards school districts, or if you're in the city, specific zip codes. That being said, what buyers are finding is that if they expand their radius from their initial town that they were looking in and still stay within the school district, they're actually able to increase their affordability. In fact, 21% of buyers purchased a home outside of their ideal neighborhood, while a third of the current buyers are considering doing so. So, how do you make smart compromises without the regret? The number one thing is prioritize what you can't change. When I first meet home buyers or I first talk to them on the phone, I typically let them know that in our area, it takes about 6 to 8 homes before you really get a feel of what you want and you want to start putting offers in on homes. Give yourself that time to at least figure that out. There's things about the home that you can't change. The main things that I suggest you pay attention to, number one, are location, and especially if you have kids being in the school district that you want, Or if you don't have kids, make sure that your drive is acceptable so that way you're not buying a house that you're going to not be able to live in that much because you're spending half your time in traffic. The other thing is the structural integrity of the house. And what I mean by that is, when was the home built? How was it built? What materials was it built with? If it's built in a development, does that builder have a good reputation? Are there any issues along with that? Things like the roof, the HVAC. Does it have central air? Installing central air is extremely, extremely expensive. So things like paint color, the type of flooring and the style of kitchen that it is, we can change, and it's going to be a lot cheaper than fixing up structural issues in the home. And then the other thing that we want to pay attention to is the location of the home and the physical makeup of the home or the footprint. So while you could do an addition onto a home, there's a lot of times local variances that only allow you to do so much. And beyond that, it's going to cost you way more to build onto your house or build up from your house than it is to change, small things like the physical makeup of the kitchen, the floors, the paint on the walls, and the style of bathroom. The next thing that I think is really important is to keep your future needs in mind. So with that, if you plan on having kids or you plan on getting married, and these are plans that you plan on doing in the next 5 years, and you're really excited to buy your first house and you almost are at the point where you don't even care what it is, you just want to buy something. Buying a condo or a really small house might not be the best financial decision. If it's not a house that can grow with your needs outside of the house and your actual life plans, what we know is that within the first 3 years or so, you haven't built up enough equity in the home because most of it's going, most of your mortgage payment is going towards the interest of the home during that time. Even with a great market increase, you're not going to build up enough equity in the home in order to sell that house and then purchase a new home. Beyond that, what we also know is that if you're purchasing a condo or a townhouse and it's in a specific HOA, a lot of those places have limits on renting if they allow rentals at all. So if you're thinking, hey, you know what, we'll buy it now and then rent it out later, that might be something you want to pay attention to up front. And what those rents are going for and where the rental market is going, that's also kind of uncontrollable. So you want to make sure that it's even possible financially where you're not, getting the rent, but then still paying on that mortgage because you're not making enough cash flow on it. The other thing that you really need to do is stick to your budget overall. It's a really emotional decision buying a house, whether it's your first home, your second home, or your forever home, but you need to write out a budget. What happens is people get excited, they buy a house that's bigger than they need at the time, or, they just make emotional decisions, right? This is a business-based decision because ultimately it's going to be the most expensive purchase that you make in your life, most likely. So write out the budget and include everything that's going to be included in the budget. And then also work with the mortgage broker and your real estate agent to find out what the trends are in things that can drastically affect what your monthly payment is. One big thing is mortgage rates. So if you're buying at the very top and your mortgage rate is maxing you out where your lifestyle is going to be severely impacted, might not be a smart decision. Now, mortgage rates are always negotiable over time and you can always refinance, but you have to plan on being stuck with that payment for at least a year before it makes sense to negotiate to a lower rate. The other thing is property taxes. If you're in a very desirable school district, typically your property taxes are going to be higher than something that's less desirable. But beyond that, you might want to do a little bit of research and look at what the increases have been over time. You're probably going to be staying in that home for at least 10 years. So if you're already maxed out on your budget and you're planning on having kids, which aren't cheap, and we know that taxes are going to go up because the saying is the one thing we can count on is taxes going up and death. So we know that taxes are going up. Make sure that you have that allotted in your budget over the next 10 years, along with what you know your lifestyle increases are going to be. And then beyond that, there's also homeowners insurance, which we don't really have any control over. You need homeowners insurance if you have a mortgage. If you don't have a mortgage, you should still definitely have it. And beyond that, a lot of that's being changed by a lot of the global changes in terms of the climate. So again, we don't really have control over that. So make sure you have that budgeted where there may be an increase over time. And then past that, if you are making the concessions on switching to a different style home, townhouse, condo, and you're going into a community that requires HOA fees, make sure that's budgeted into what you're paying per month. You do get amenities like gyms and pools and things like that. But what I find a lot of times is people don't even use the pools. And past that, you're now paying, a couple extra $100 per month on top of what your mortgage payment was. So if you're maxing out your mortgage payment still, to get the bigger square footage townhome, and you're still paying the HOA fees, again, you're going to greatly affect your lifestyle budget. Now, compromise doesn't have to necessarily mean settling. What you need to do is focus on what truly matters. And those things are the location, especially if school district is going to be important to you, the structural integrity of the home and understanding what the costs are going to be over the long run, and then also what your long-term goals are in terms of your life. Remaining flexible on other aspects like, the style of floors that are in, or, what the kitchen looks like. Those are things we can take care of. And what that's going to do is position you to make smart decisions. And remember, working with an experienced real estate agent as well as a mortgage broker, that's going to be able to help you plan and understand what concessions you should make, which ones you shouldn't, and overall where the market's going to be trending over the next several years based on historical patterns. In the end, buying a home is about finding a balance between compromise and fulfillment. And with the right planning, your next home could be just that.